Isn't having a mortgage the same thing as rent to own? When you have a mortgage, you already own it on day one. Your house is collateral for the loan. Until you pay off the mortgage, the house isn't actually yours. It's the bank's. Nope, totally incorrect. Perhaps that's the confusion. The house is 100% property in every way. The BNCK has given you a really big loan with the house as collateral, but it's never the bank's house. No, rent to own is an agreement you make with a landlord. You pay more on your lease, but will have the property reserved for you to purchase at a later date. You still have a landlord-tenant relationship and aren't financially responsible for the home. Your name is on the deed, not the bank's name. So you own the house. The title is in my name. Also, I could pay off the mortgage at any time with cash or a refinance. Also, equity. If you can't make the mortgage payments, you can sell the house to pay off the loan. And if you have equity, have money left over. If the house is foreclosed on because someone has stopped paying, the mortgage is paid first, but the remainder of the money, the equity, goes back to the former homeowner. No, if you stop paying rent, you don't have anything of value to show. If you stop paying on a mortgage, you have equity in the house. The house is yours. So when it goes up or down in value, that is your equity and net worth that is changing. And you are the one with insurance, because if that house burns down, you are the one who has to deal with it. You essentially have a loan with the house as collateral. So the house is yours. And you must pay off that loan, or the bank takes your house and sells it to pay off the loan. Think of mortgage vs rent-own as the difference between buying a car and leasing it. With rent-own, the most common misconception is that you are banking those payments and at the end of the term can apply the full amount to the purchase of the home. In truth, you are simply paying rent that goes down the drain and getting zero equity. At the end of the term, you are given the option to buy the home at a discount, but it is not the full amount you have already paid, and if you walk away, you do not get that money back. Rarely is this a good idea. It's about as close to legally scamming someone as whatever the current popular MLM is. No. If you're renting, you're bound by the limits of your rental agreement. Want to replace the door? Remodel the bathroom? Paint the living room? You need the landlord's permission, though the landlord is also supposed to handle any necessary repairs, so it's not all bad. With a mortgage, it's your house. You can do what you want, though no one is going to fix your broken water heater for you. Sure, you borrowed money from the bank and the house is the collateral, so if you don't pay them back, it might get repossessed. But aside from repaying the loan, the bank has no say in your affairs. No, with a mortgage, you're building up equity. You can sell any time and get your equity out of the home. If the price of the home went up, you can make good money. With rent to own, if you stop paying rent, you walk away with nothing. If you have a mortgage, you own the house. If it appreciates 100K tomorrow, you can sell it, and that 100K is yours. That's incorrect. The bank doesn't own your house if you have a mortgage. You own your house and you're free to do whatever you want with it, including selling it. The bank owns a loan balance. Actually, the house is yours. You get a loan from the bank to pay for it, then have to pay back the loan. You don't write a check for rent to the bank every month. Well, you write a check to the bank every month, so it's the same. Tell that to the insurance companies and utilities and plumbers and electricians and painters. You don't ask the bank for permission to get pets. You don't complain to the bank when the HVAC system dies. You just described rent to own. Then I guess people with a mortgage don't object when the bank sends the sheriff to evict them for moving in so without their permission, as I've never owned a home. So I don't know why this dumb analogy irks me so much. I guess because I'm an English major, maybe it's about the wrong phraseology. A loan is not rent. That's all there is to it. Leasing a car is not the same as buying a car with a loan. Renting a carpet cleaner is not the same as buying it within a firm loan. They are simply not the same. Period. No, you aren't understanding either of those concepts correctly. A mortgage is a loan with collateral, so you own the house in full, and the bank has only very limited rights against it. You can't sell it without paying off the loan, and they can take the house from you if you fail to pay your mortgage. Outside of those limited exceptions, you own the house in full. You can put in additions, you can take out another loan against the value of the house, you can sell the house, you benefit from increases in the value of the house. Act. A rent to own, you don't own anything until the full term is over and paid. You can't make alterations without permission, you can't sell, and the owner can terminate the entire contract, usually with a relatively small termination fee, and you are stuck with nothing. They are wildly different in terms of your legal rights, even if it appears superficially similar in everyday circumstances. No, rent to own, you never own it until it's paid off. Owning a home and paying a mortgage, you own the home and the equity, and it is yours if you sell. You always have skin in the game. How common are rent-own leases on houses? In any event, I would expect the rent-own payment to be more than regular rent, which in turn is more than a mortgage payment. And you're surely building less pseudo-equity than real equity through a mortgage. And the landlord may have any number of ways to terminate the option on buying the house, and it's easier to evict than to foreclose. In other words, worst of all worlds. No, with a mortgage the deeds are in your name and there's a lien on the property. But the house is yours and will pass to your estate, not to the bank. Bank can't kick you out on a whim, but only if you don't pay timely. You do own the house. The mortgage company is a lien holder on the property. Until you pay off the mortgage, the house isn't actually yours. It's the bank's. No, the house is yours. It's just collateral for the loan you took out. That's why you can sell your property without consulting the bank and even port the mortgage to a new property.